The Augusta Rule allows you to rent your residence for 14 days a year tax-free. Why it applies to business owners is you as a business owner can actually rent your residence to your business. Sounds crazy, but you can do this. It's been in the tax code for over 50 years, and it allows you to reduce your income in the business and then to receive the income 100% tax-free. 80 or 90% of the reason why business owners cannot actually get the deductions they try for with some of these creative strategies is because they don't get their paperwork right.
Right.
You have to get that right.
If it's not documented, it doesn't exist.
Bingo.
Right. Yeah.
Bingo. Yeah. Not documented, never happened. Really the goal is how can we cut through all the red tape? How can we take care of all the compliance? How can we provide valuations that we can stand behind? How can we remove risk from the entrepreneur? And how can we just put $1 billion back in the pockets of business owners by 2030? And that's what gets us excited.
The question to ask yourself is, what am I going to do with the money? I can hire another key employee, improve your home, which you're doing meetings in, so things look good. There's so much value here. Plus, it can be, you literally could use it to fund your kids' college education, which looking back, I wish that's how I would have done it, because I could have done it with tax-free money. Hey, welcome back to Capability Amplifier. This is my friend, Nethaniel Ealy, and you're gonna have a blast today, I promise, because today we're gonna show you how you can find an extra $10,000 to $50,000 in your business right now in tax-free income. And you may have heard of this before, but I can virtually guarantee you are not taking advantage of it the right way. And I've got good news and some embarrassing news for you. The great news is this year, I got a $40,000 check back from the government by taking advantage of the strategy that today's guest is going to share with you. Now, the bad news is I found out that my accounting team wasn't doing it for a couple of years. And if I look back at all the years I missed out, and I actually did do the research. So I missed out on $30,000 to $50,000 a year for the last 10 years. So I'm gonna just round it down, but to $38,000. So let's say I lost $36,000. $36,000 a year, that's $360,000, probably more. I did a little research with ChatGPT, and if I would have just taken that money that I would have gotten back and put it into the NASDAQ, I would have gotten an average rate of return of 10.8% back, which equates to more than $500,000. So if you like money, especially money you literally don't have to work for anymore, you're gonna love this episode. So I'm gonna introduce to you my friend, Nethaniel Ealy from the AugustaRule.com. Thank you for being here, my friend.
Yeah, thanks for having me, Mike. Appreciate it.
All right, so let's just begin with the question everyone's asking. Even if they know what it is, what is the Augusta Rule? And I'll ask you some more questions about why you got into this business in the first place.
Sure. Yeah, just starting with what the rule is. The Augusta Rule allows you to rent your residence for 14 days a year tax-free. And why it applies to business owners is you as a business owner can actually rent your residence to your business. And that sounds crazy. We'll get into the details. But you can do this. It's been in the tax code for over 50 years. And it allows you to reduce your income in the business and then to receive the income 100% tax-free.
Yeah, it's crazy. And when I found out about this, which was years ago, and then found out we basically weren't doing it right. And then when we met, you told me about some ways that we can take advantage of this from multiple homes, including our places in Mexico. So there are so many really cool strategies and techniques here that most CPAs either don't know about or they don't want to do the paperwork on. This has been a great education process for me over the past few days. So the backstory about where the name came from, that's kind of interesting. And I did do the little research because Texas A&M University, there was a good chunk of information about the stability of this. But what's the story? Why do they call it the Augusta Rule in the first place?
Yeah, it's named after the Masters golf course in Augusta, Georgia. And so really what it is Section 280A, subsection G of the IRS tax code, but that's not what most normies know it by. They know it by the Augusta Rule. So it was nicknamed sometime back in the 70s when this law came into existence and came into IRS code. And it's nicknamed that because the residents of the golf course, the Masters course in Georgia, successfully petitioned Congress to include this provision in the tax code because they were renting their homes for the golf course. So just people actually coming into their homes, renting them out to third-party people. And they said, you know what? we don't want to have a different entity for this. We don't want to have a separate tax return. We don't want to treat this as a business. Can we please just not record this? And for some reason, they were highly persuasive to both Congress and the IRS. I'm guessing, I don't know this, I'm guessing there were probably a couple senators, congressmen, judges, et cetera, around the course, and they pulled it off. And so the downstream consequences are that you can rent your home to somebody else, but guess what? Somebody else also includes a business, because in the eyes of the IRS, a business is a separate person.
Yeah.
So that's why we're at this table here talking about it.
All right. Yeah. And one of the things that we did today when we got prepared is we came up with the 10 conditions that must be met for this to work. So we're going to go through that. We've got some great case studies. Some of them, again, have blown my mind. But why don't you tell me a little bit about John Heyer, your business partner, and your first experience with getting a big return because of the Augusta Rule.
Yeah, so I met John in 2017 at a real estate mastermind. And at the time, I had already spent a couple of years trying to figure out how to reduce my taxes. I had gotten a tax bill a couple of years prior to that was larger than my salary. And that just, I hated it. Mm-hmm. I felt so upset. I felt helpless because I felt like there's nothing I could do. And my current CPA was telling me there really was nothing I could do. And so I ran into John. He was saying, no, there's all kinds of things you can do. I engaged him to do a deep dive in my situation and provide some strategies. And the Augusta Rule was the very first strategy he taught me. And so, do you want me to tell the rest of the story now?
Yeah.
Okay.
No.
So basically, fast forward. First, it took me a long time to implement the rule, because even though the Augusta Rule is simple as far as tax strategies go, it still requires a lot of paperwork. The tax code is not just like, oh, here's the code, you follow it. There's like, here's the code, and this section intersects here, and this section intersects here. And then, by the way, this one over here overlaps this way. And so you have to have somebody like John that knows the thing top to bottom, inside and out. So then he's explaining it to me. I can get it basically, but I'm still thinking, this is complicated. This is complex. It's a bunch of compliance. I'm not a tax attorney. It took me at least a year or more to actually feel comfortable applying it. I hired another tax professional, paid someone else thousands of dollars, got even less information from John, and then finally went back to John and just said, John, can you just really break this down, at the dummy level for me so I can really implement? And then started having traction in it. Fast forward from there. I'm at another mastermind, and I'm having a conversation, and we share tips at masterminds with our business buddies. What's working for you? How do you make money? How do you save money? So this came up, and I'm discussing it with some financial advisors, and they said, yeah, of course we know the Augusta Rule. We apply it for our clients, and I'm like, oh, great, that's fairly rare. So tell me the ways that you guys are having compliance in the Augusta Rule for your clients. Mm-hmm. And they looked at each other and kind of chuckled sheepishly and said, yeah, we really don't have any paperwork behind it. We kind of just fill out $1,000 a day and call it good. Wow. I'm just like, are you kidding me? Like, this is a highly complicated thing. And if you're not actually backing it up with the paperwork, you're smoked. Yeah. And in fact, John, tells me that 80 or 90% of the reason why business owners cannot actually get the deductions they try for with some of these creative strategies is because they don't get their paperwork right.
Right.
You have to get that right.
Yeah. And so, if it doesn't exist and it's not documented, or if it's not documented, it doesn't exist.
Bingo.
Right. Yeah.
Bingo. Yeah. Not documented, never happened.
Right on.
So that gave me an idea. I just thought, well, and I even asked them on the spot. I said, well, would it be helpful if there was a service or product that really took care of this for you? And they said, absolutely. And so I'm thinking in my mind, okay, I have 10 ideas a day of a businesses I could start. Here's another one. Think about that, but sounds like a lot of work. I'll set that aside. Fast forward some more time. I'm sitting across from a guy who is a premier app builder, and he says, hey, I could build an app for that. And I said, really? Because we started getting a conversation. This came up. And so we ended up building a product around the Augusta Rule done for you. So we have a software element to that, and we have a service element to that. And really the goal is how can we cut through all the red tape? How can we take care of all the compliance? How can we provide valuations that we can stand behind? How can we remove risk from the entrepreneur? And how can we just put $1 billion back in the pockets of business owners by 2030? Like, that became kind of our North Star. We're headed for this, $1 billion in the pockets of business owners by 2030. And that's what gets us excited in the Augusta Rule.
Yeah, it's a great story. And what I love is how you've broken it down and made it so easy, which is there's a calculator, and we'll share that with everyone listening or watching, which is it's at the augustarule.com, just so you know this, but there's a calculator that'll help you calculate how much money you can get, tools to actually get you there, and ultimately what you guys do is provide a service where it doesn't cost the business owner anything until you figured out how much money they're going to get. You just take a small percentage of the rebate.
That's correct.
But if you're already doing it, you guys can do better, usually by a multiple.
Yeah, I think there's a temptation for some entrepreneurs to have their brains turn off when they hear the Augusta Rule because it has made the rounds on TikTok. Some CPAs have heard of it, and the ones that have heard of it are honestly kind of jaded towards it because they think, oh, great, here comes another guy that wants me to do the Augusta Rule. I'm not going to take the time to do the paperwork, they're thinking.
Yeah.
And I know that what you give me is going to be garbage, and you're going to try to make up some number. It's going to add complexity and liability. Brain turns off. They're like, please go away. Yep. And I think the message that we have is that doesn't need to be the case. It is a legitimate rule. It just has to be applied legitimately. And as a business owner, you don't need the brain damage of doing that yourself.
Yeah, totally. And I think through the lens of a business owner, I generated enough just this past year effortlessly because I'm already doing business meetings, right? And I meet all the requirements, and we'll go through the requirements in a moment and some of the biggest gotchas. But the question to ask yourself is, what am I going to do with the money? I can hire another key employee, improve your home, which you're doing meetings in, so things look good. There's so much value here. Plus, it can be, you literally could use it to fund your kid's college education. Which, looking back, I wish that's how I would have done it. Because I could have done it with tax-free money.
Yeah, I mean, everybody can think of ideas of where to put their money.
So let's go through a couple of case studies. I know one of them is when we were meeting earlier, you had some real-life clients. Jenny and Rod were one of them that we gathered. But you've also got, when John and you and I met, we put together some real-life examples. And there's the Normie home in Ohio, and then let's go up the value chain, but then go through the 10 steps and the 10 conditions that might be met. So you want to do a couple case studies?
Yeah, we can do some case studies. So the Normie home in flyover country, could be Ohio, could be somewhere else. Let's just say it's a basic rancher, 1,800 square feet, 3-bed, 2-bath, that type of thing. That describes a lot of our country, a lot of business owners, and at some level. The done-for-you plan may not be a fit for them, but we have a software that might be a fit that's going to be accessible. In that certain situation, you're probably going to rent your home for anywhere between $1,000 and $2,000 a day. Let's just call it $1,600. That's a number that we've been able to see kind of nationally as an average for that type of home. And so that's going to be $22,400 a year if you do all 14 events. Because in the Augusta Rule, you can rent for 14 days a year tax-free. Not more. If you rent a day more than that, the whole thing's disallowed. So 14 times. So 22.4. And if they're in a lower tax bracket, say a 30% bracket, that's going to result in a $6,700 cash in pocket return to them. So for that individual, that may be worth picking up off the sidewalk.
Yep.
And we want to make a product that is available to them. For a lot of our clients, that's not going to be super exciting. But for another segment of our clients, they would be thrilled to have another $6,700 in their pocket.
Right.
So that's one example, broad example on a low level. Did you want to go into the next example up from that?
Yeah, I think in my case, there's what I didn't know until we met was you can have multiple homes. In fact, multiple rental properties. So explain that, because this is something that I know my CPA didn't know. And we hadn't taken advantage of it. And again, I look back and there's tens of thousands of dollars lost every year. And this is a 50-year-old rule. So I could have been doing it a long, long time ago, because I've hosted business meetings, lots of them at my home. And like we're at my home right now doing this video. And that doesn't technically qualify. But let's tear apart another example.
Yeah. So another example would be, like you mentioned, second homes. And a lot of people don't realize what the IRS defines a residence as. So I think that we should go back to that and let people know. So a residence is very simple when it comes to this code. It's three things. It is a place that you are eating, sleeping, and using the facilities in 14 days a year, so 2 weeks a year. So if you live in a place for 2 weeks a year and there's a kitchen, a bathroom, and a bedroom, it is a residence.
And that includes an RV or a vacation home.
That is correct.
Okay.
So you could have a second, third, fourth, as many homes as you could possibly live in for 2 weeks a year. It can be an RV as long as those facilities are there. And then there's even another much lesser known provision that allows your descendants to be qualified or your parents. So we can get to that a little bit later, but this ends up being a lot farther reaching than most people realize. And it can be a great way. Again, we're using the tax code to unlock our own money, right? We're using the tax code like judo. It's a code, but if you crack the code, it can be on your side. So that's the macro thing here. So in the case of, so we defined what a residence is. And now let's say, you have a vacation home in Vail. Okay. Now that all of a sudden becomes eligible for you to conduct business at and receive, another whole home's worth of tax deductions and tax-free income. Let's say you have one in Mexico or the Caribbean. Well, guess what? Again, not very well known, but we educate people on this. Most of North America, Central America, the Caribbean all qualifies through some various treaties to be treated for the Augusta Rule as well. So now you have a home in Mexico, you've got a home, in Florida, you've got a home. You can name the locations and they all qualify.
Or rentals. It doesn't have to be a home that you own. And that is a great unlock.
It is. It could be a residence, right? So it could be a penthouse you have on the 20th floor in New York, in Manhattan. And if you're renting it, it's still your home as long as you're staying there 2 weeks a year.
That's fantastic. Yep. So let's break down some of the numbers because that matters. I remember when we put together some of these examples, first of all, you could do up to 14 days that you can rent. So they have to be legitimate business meetings. And again, we'll go through the specific qualification. And the number we came up with is, and this is a real life example that we got from John, your partner.
Yeah. So in this example, this individual has 3 beach houses in Mexico. So it's in the North American area. So it's a write-off for business meetings is justifiable. They are living in the residences for 2 weeks a year or more, which is what qualifies it as a residence because they're moving from place to place throughout the seasons. And they're having honest to God business meetings, like legit business meetings. And that's key. A lot of times people are really trying to, get cute and tweak the code. It's like, no, this is supposed to be a legitimate business meeting. Would the business actually rent a facility for what you're doing? If you can say yes to that, it qualifies. If you would not say that, then slow your roll, try again. But in this case, this person actually had them, they're documented, and there's lots of existing activity to justify it. And he actually has clients that are willing to travel to these homes for business. And so his rent in this case was, let's see, $3,000 for one. Actually, all of them, he comped at $3,000. So that's $126,000. That his business is then paying himself personally tax-free. He's in a 37% bracket, and this person resides in Texas where there's no income tax on the state side. So his annual tax savings were $46,620.
That's awesome.
Yeah, for doing nothing different than he already does normally.
Yeah.
And I think that's the key. Our ideal clients are the people that are already having people in their homes. They're conducting business in their homes already, and they're literally just leaving this money on the sidewalk.
Yeah. And one of the things that we put together, because we couldn't help ourselves, is we put together an Augusta Rule deduction guide that you can get at theaugustarule.com/save. So we've got the calculator there, the deduction guide, and some more tools and templates. So let's keep going. I know we've got one more great case study before we get into the 10 conditions that have to be met.
Yep, absolutely. So you want to dive into that?
Yeah, let's do it.
Okay, this client is based in California, and they have a beach house that they're able to justify $7,000 a day during high season. They've got a personal home that is very well appointed, and that justifies $4,000 a day. And then they also have a farm that's set up kind of like a wedding venue, like a barn dominium type setup. And they're getting $5,000 a day for that. So they use their properties for training, for filming, for fundraisers, annual meetings, which we need to come back to that because usage does matter in the valuations.
Yeah, I think that's the next thing we'll do is we'll tear into, so how do you value this so you don't get in trouble with the IRS tax code?
Yeah.
Okay, keep going.
So his annual rents combined are $224,000. And because he's in California, he gets that extra special California tax. And so state and federal combined is 50.3%, so over half the amount. So his annual cash in pocket just from employing the rule is $118,720 cash. So huge deduction, huge cash infusion. Again, not changing a single thing that he does in his business. And we're not even touching on all the productivity that's occurring in these legitimate business meetings that are catapulting his business.
Yeah.
And that's the whole other side of the Augusta Rule.
Yeah. Well, it's also part of what you've done because you've systemized this so well and you've built the software platform to find the opportunities, which is brilliant. So you also have the bolt-on strategy, which is the traveling for business. That's worth covering.
Sure.
And then we'll tear into the 10 essentials.
Yeah, this one's got, it's a cute one, but it's real and it's a helpful little bonus kind of. So if you're traveling for business and let's say you've got a family member nearby, a child or a parent, you can actually stay with them and you don't have to stay there 2 weeks a year. You can just stay with them as a one-off and you can pay them a legitimate amount per night, which again, our program can help with. And if you do that over the course of the year, and let's say you could do up to 14 and you did that and you just do a modest, like $250. Again, maybe it's a flyover country house, super basic, or your son's apartment at college. Every single time you could pay him, let's make up a number, $250 a night, and we would figure that number out. But let's just be modest. Well, that's still $3,200 a year that you're transferring to your family member. And you're getting a tax deduction. So you're getting a tax deduction out of your business and you're transferring tax-free wealth to that person in your family.
It's really brilliant.
Yeah.
Very, very smart. Yeah, it's a super smart way to give your kids or, your parents money.
Yeah.
Oh, I wish I would have been doing this. This is like, oh my God, 30, 40 years.
Well, again, there's a lot of brain damage if you're trying to track this yourself, right?
Right.
And that's the thing. So everyone on TikTok and on the socials are like, oh, Augusta Rule, yay. But then you get into the weeds and you're just like, it's not worth it.
Yeah.
It's not worth my time.
Yeah. Too much paperwork, too many moving parts. I totally get it.
Yeah.
So let's go through the 10 essentials and then let's talk a little bit about what the process is like that you guys have simplified dramatically.
Yeah. Yeah, I think that's part of the AugustaRule.com's magic. Really, that's John. So John is a 30-year experienced tax attorney. He's a rental owner himself. He's a business owner himself. He's extremely unique, even inside of tax attorneys. And he's really helped us define, what we need so that we're totally compliant. And so the business owners don't have to be concerned. And we've got 10 items. So number one, we need a rental agreement on or before the event. And this gets screwed up all the time. People think, oh, Augusta Rule, great. Oh, I forgot. I'll just go back and record everything from the past year. That's not great as a narrative if it ever gets challenged. So we want it on or before the event. Secondly, we want comparables for the rental valuations. We want to know that there's a basis for the amount charged. And again, our platform takes care of all that. But people make this stuff up. High-level people, wealth advisors make this stuff up with their clients, and they're just adding risk.
And that basically means, I know one of the things that you told me is anyone, for example, who's doing a mastermind at their event, or let's say any kind of a production. Talk a little bit about how production dramatically increases the value.
Sure. Yeah. So if we're talking about usages and how they increase value, film production is one of our favorite case studies. So if you are a business owner and you already have people in your home and you film, that is just like tip of the mountain for people, top of the mountain. Because we have already collaborated with somebody who provides national film scout valuations, and we can come in and justify a valuation that's like 2x, 3x, 4x, what you might otherwise get because it's a film industry valuation.
Right.
And so those turn into some real numbers for people.
So it's basically the equivalent of charging yourself a location fee.
That's exactly
and
right.
that is I mean, you think about it, you could actually produce your company documentary with the tax savings.
And you could probably pay for it in some situations.
Right.
Yeah.
So there's so many ways to, effectively double dip here. And again, I look back at all the things I've done over the years. I've actually produced documentaries, and I've found creative ways to finance them. But this would have been a triple dip.
Yeah, exactly.
It's amazing. Yeah.
Yeah,
All right.
this really is a bolt-on thing. I think that's the thing to emphasize. We're not looking for people to change their behavior. And I think that's a mistake that some practitioners have. They're trying to, alter business owners' behavior for this rule. I would not advocate that. This is for people who already do these things. So if we talk about the 10 things again, we had a little excursus there on value, and that's
So we got the rental agreement on or before. So it's really, these are planned, but you've got a system for that. The comps, which again, historically, big risk if you're making stuff up. This way, if you've got something to show the IRS, it's right there. Again, it's documented, and then they'd have to challenge it. They're not going to go through the work to challenge it. Not really. And I mean, I better not say that, but but it's going to make it a lot more difficult.
Realistically, it's going to make it a lot more difficult for them, and that's what we want. We really do. We have to tell the narrative, and we have to tell it in writing. And so for our comps, we've come up with a process, reviewed it with John, and he said, yes, that's what you need to do. So then the third thing is we want at least 3 or more attendees. And I think this is another area people go off the rails. They say, well, actually, here's one example. I know of one case, at least one, I'm sure there's others, where somebody invented a system where you have a meeting with yourself, and then they charge their clients many thousands of dollars to run a program where you have a meeting with yourself, and they say, hey, look, you can justify it. And John says, absolutely no way. Like, you're going to get nuked if that ever got challenged.
Yeah.
And so you've got these high-level clients who are getting bad advice and adding risk to themselves in the name of saving money. We say 3 attendees or more. Where you have to be careful with this is you can't think, oh, I have a husband and wife partnership, and I'll add our assistant in, that's 3 people. No. The husband and wife are one owner of the business, and then you need a legitimate business purpose always.
Yeah.
So 3 or more people, the more people, the better. That's number 3.
So for years, I've been doing masterminds, and I'm in a few masterminds, and I've hosted them at the house. So again, and we shoot content while we're here, so we could justifiably call it a location. And I know so many other business owners doing that, and I know for a fact they're not getting all the deductions. All right, Number 4.
Number 4, the meetings have to last 4.5 hours or longer. So this is something we've specifically included in our program because we want to justify a full day's rent every time we're having an event. Because again, you only get 14 of these, so let's maximize them. By going over 4 hours, because the IRS defines a business day as 4 hours and 1 minute. So if you get 4 hours and 1 minute, it is a business day. So then why do we say 4.5? Well, because we want to make this incontrovertible. Let's say the IRS challenges it and they say, hey, Mike, did you go to the bathroom during that 4 hours? Disallowed. Like, we just want that little buffer zone, where we know that there's a business day justified. So that's number 4. Number 5. Credibly documented agenda and meeting notes. So not only do we want to have a true business purpose, we want to have notes that actually backs this up and says, here was the meeting agenda.
Okay.
Again,
and you've got the notes and the templates for those?
We do. Notes and templates. In the free money plan, we actually pre-populate them for people, and we just ask that they update the details afterwards. Even better, your employee, your EA, does it for you. That's really where you get the magic from this. So no work for the business owner. Number 6, a strong business purpose for the events. I think I kind of mentioned this already, but you have to have a true business purpose for the events. No playing around with that. Number 7, really watch out for any semblance of entertainment, meaning don't just throw a big kegger and call it a business event. Now, could you have, a drink with your meal? Could you smoke a cigar? Yeah, you could. Should you take a bunch of photos of it and include it? Probably not. It's a business event. Yeah. Yes, you do sometimes have a cigar or a drink at a business event. And bear in mind, what's the narrative?
Right.
Don't make this an entertainment facility.
Make it defendable and make sure you got a whiteboard there. You're drawing some stuff and you got people crowded around.
Yeah, sure. Maybe put up a sign that has your business name or this event sponsored by, right? Oh, absolutely. Number 8, you actually have to transfer money from your business to yourself. Some people get cute with this or they miss it and at the end of the year, they're like, oh man, I didn't transfer any of the money. And they just do a bunch of like, IOUs or, to be paids from the business and personal. No. Like cut a check, when the event is booked, shortly thereafter or ahead of time, right? Because if you rent a facility, you pay ahead of time or on the day of rental, or you have like a net 30 billing or something. Well, do that as well. Our software is going to automatically generate the invoice. It's going to send it to your business. Your business would pay it just like a normal invoice, right? You get a check, deposit the check, that type of thing. Awesome. So whether you're using our software or not, transfer the money. Number 9, properly reporting and filling out forms. There are a bunch of different documents, forms, rental agreements that need to be filled out and that need to be filled out properly and they need to be compliant. Again, we provide all those things. Ours is you fill out information one time and auto-populates everything type of thing. Otherwise, you got to get stacks of forms. You got to type them out, sign them, store them, don't lose them, all that type of stuff. It's got to be documented. And then lastly, number 10 is just get started now, right? Don't wait.
Yeah. When's the best time to plant a tree?
Yeah.
Right on. Okay, those are really good. I'm glad we went through and prepped these because that's, if I were listening to this or watching it right now, I'd be like, okay, how's this work? And you can see where the rub is, why CPAs are like, ugh, I don't want to talk about this because the paperwork and the tracking, they're not set up to do this stuff. They're not specialists. And even just today, we were talking to someone who says, yeah, we do the Augusta Rule. And he was rolling his eyes because he's like, and we don't have a system.
Yeah.
So let's talk a little bit about how long it takes to do this. So let's say I said today, yes, I want to do this. And even if I've been doing it, but I know I haven't been maximizing it because I haven't been taking advantage of everything because it's just like, it seems like such an overwhelming pile of doo-doo to get through. Yeah. But how much time does it take for a business owner to get onboarded, go through this process, and get it installed, assuming they've got an EA who can do like the check-in stuff?
Yes.
It's simple.
Yeah. So really the EA could do everything. So the business owner, this could be as simple as sign up for this, you've got authority to handle this for me, and that's it. And then the EA can jump on. We have about a 45-minute onboarding, depending on how organized the particular EA is or business owner. And on that, we're going to really examine their goals and what they want to achieve, what their dangers, opportunities, and strengths are with the rule specifically. And then we're going to schedule those 14 events right on that onboarding call. And I think that's also one of the things that I think is a huge value add with what we're doing here is I did the Augusta Rule without our system. I did not book 14 days. Like they always slip through the cracks. You don't get the maximization of the 14-day deduction unless you have reminders in a system and basically somebody running that for you. So that's one of the biggest things. And so 45-minute onboarding call. And then after that, the extent of their work is to log into the platform on or after the event, so same day of your event or the day after or something, and just update the pre-populated notes. Just make sure they're accurate, right? And that's it. We do everything else. Yeah.
Sounds like 5 or 10 minutes worth of work per meeting.
Yeah, absolutely. Okay. Yep.
All right. So who is this? We've gone through the who it's for, but what are the specific businesses where you can basically say, yep, you don't qualify, and who's it absolutely not for? Who does it just not work
I love that question. Yeah, who is this not for? This is not for people who want to get cute, and like mess around with the rules and stuff like that. This is not for people who have never hosted anybody in their home, right? This is not for people who, are going to get hung up on the details and the weeds themselves and like really want to get into this. I mean, people are welcome to do that. We're not saying don't study it if you want to, but is that what you really ought to be doing as a business owner? Everybody's got their own unique way of creating value. And our goal with the Augusta Rule is to unleash them to do more of that, not to distract them. So it's not for those people. It's not for people who are probably earning less than, I don't know, 200K a year. Because I mean, it can be, but frankly, you ought to be just figuring out how to make more money in your business at that stage. So we want to be really careful to not talk about this as a kind of like a, one size fits all, this is for everybody type of thing. It is not for W-2 employees, right? It's for business owners. It's not for sole proprietors because that's not a separate person in the IRS's eyes. And really, if you've got a number of partners in the business, so multi-owner businesses, this can be very difficult because then, this owner and that owner and this owner and that owner have got to all equally take advantage of the rule. Otherwise, you're unevenly distributing capital out of the business. So, and it's also not for, let's say, your investment rental property. So you have a property that you're renting full time out. Well, that doesn't qualify. It's already being rented more than 14 days a year.
Got it.
So that's who it's not for.
Okay.
Yeah.
So the who it's for are business owners like LLCs, S corps, C corps, partnerships. If you have multiple businesses, multiple houses, you're putting the 200K marker. Although
that's a random number.
Okay.
Yeah.
All right. And I think anyone who's like, ugh, I hate writing out a check to the government, for sure. And I do love this notion. What we got into is if you're already doing masterminds and events, this is such a no-brainer because you don't have to adjust any behaviors.
That's right.
So
if you're regularly filming content with a crew like this, it wouldn't count if it's a Zoom thing. Because we want people there. Why would you rent a facility? But if you've got a bunch of people there and you're filming and let's say you're quarterly doing this and you're making all your content for the quarter, like 3 days a quarter, this is like a layup.
Yeah. Super smart, especially if you can bring clients in. So what I would do if I were doing a mastermind is I would bring in a bunch of clients and interview them and make them part of the content, so an experiential event.
Yes.
And I think that is the word here is it really does need to look like an event.
Yeah.
So, okay. Are there any questions that I should have asked you that I didn't, or any nuances? If you think about your partner John's point of view, a tax attorney, right? What would he have wished you would have said or told me that I didn't ask you? Yeah.
Well, John wants us to say that there's no guarantees. The way there's certain things, if we say anything with like absolute certainty, in his words, that makes him poop his lawyer diaper.
Yeah.
So we have to.
He put that in the notes. We know, so that was really funny.
So gotta say that. But another thing that I would add, and this kind of backs away from John, but it popped into my mind, is that this is for people who keep a calendar. If you don't have a calendar, if you're not organized enough to have that in your business, you ought to be working on that first. Because how can we schedule 14 events on your calendar if you have no calendar? So I'd say really what we're looking for is, single owner-owned businesses. So one person who are high income and, obviously don't like how much taxes they're paying and who keep a calendar.
Got it.
That's it.
Got it.
So
right.
Going back to, you want to talk about anything else with John, or did you want to move on from there?
No, I think that sets us up. So let's talk about some of the goodies, because we've been working hard for the past few days on all the tools that people can get just if they're interested in learning more at the website, which again is theaugustarule.com/save. But let's go through each one of those and why folks need it and what the value is.
Sure. First off, we've built a calculator that estimates people's savings. So they can go on, they can plug in some numbers and get at least an idea of what they might.
5, 10, 20, 30,000, 50,000 bucks.
Now, the trick with that is guessing accurately what comparables you'd have for your home. And that's kind of a black hole for most people. So these guesses they're wags, but it gives you something.
Yep.
If you want to get an actual estimate, you got to jump on with us. We'll provide that to you for free. So that's no problem. But another thing that we've done is provided the Augusta Rule deduction guide. So we give a guide. Look, here's the railings on this. It's going to give you a real good overview for people who are interested in digging into that. We provide 100 things that you can actually do with the rule.
Yeah.
So very helpful for people. And then we have a masterclass where we really dig into that. We have content developed on the rule this portion of the rule. Here's what to do. Here's what not to do.
Yeah, deeper into the case
Deeper
studies.
into the case studies. Yep. We've got, we also, John threw in, kindly, some entity maintenance courses and templates, which for some people sounds like major,
Yeah, what do those words mean if I don't know if my eyes just rolled?
Yeah,
what is
exactly. Basically, businesses universally, for the most part, do a terrible job of maintaining their entities. And what that means is you ought to be actually having annual minutes for your entities. Otherwise, if you do, God forbid, get into a lawsuit, the corporate veil will be pierced, is the language they use, meaning your entity goes away and you have no protection. Well, if you actually have notes on your entity, you actually have quarterly or annual meetings and you have written notes, then you strengthen your entity. So we provide those templates and courses on that.
That is awesome. I can't stress the importance of that enough. That's one thing I'm really pleased with. We've always had with our team all that in place, but I'd rather have it here because this money we've been missing for so long. It's I know it's totaling hundreds of thousands of dollars.
Yeah.
And again, the compounding of this is the mindset that I want folks to really hear is it's not just the money this year, it's what you can do with it over 5 or 10 years.
Yep.
And there's a full-on retirement account either behind you or in front of you.
Yeah, that's a great way to put it. And that's the way to think of this, because this is an annual recurring, benefit, annual recurring. So let's see, you were asking what we also were including for people. Yep. So we also offer a free consultation with an Augusta Rule specialist. And in case you're thinking that's, an untrained person, I'm going to be on these calls. So, I won't say that I'll be on all of them, but I'm on these calls, and I'm asking business owners specific questions to their specific situation. And again, we're on a mission to put $1 billion back in the pockets of business owners by 2030. So I'm there to help.
Yeah. Well, I think within 10 minutes of us talking, you told me about things I'd never thought of, never heard of before, and I've had people looking at this, even though we missed, right? And our strategy moving forward is going to be completely different than it's ever been in all the years I've been in business. So awesome. Yeah.
I think what else? We also include a bunch of forms and templates that people need. Again, these are not more work for you to do, but they're things that could benefit, some clients.
Yeah. Well, it's a matter of getting clarity and knowing if you can make a good decision. So the bottom line is, at a minimum, go to the augustarule.com/save, get all the goodies that are free. Do the calculator, see how much you're leaving on the table, and you might as well schedule a conversation with you or one of your specialists and find out how much really you'll save. And what you guys do is it's a done for you service, and you get paid by making or getting me maximizing my rebate.
That's correct. Yeah, we only get paid when our clients get paid, and we get paid in proportion to it. So our interests are aligned. And again, it's a product, but it's also a mission. Yep. We care about business owners and entrepreneurs because that's who we are. All right. And that's who we want to be a hero to. So.
All right. Fantastic. Well, I think from my point of view, for you listening or watching, if this is a big enlightening experience for you, make sure you leave some comments and, of course, rate this episode and share it with another business owner or friend that you know who could take advantage of this. Because out of all the no-brainers I've seen in years of doing this podcast, this is in the top 3 for sure. I think it's in the top 2. So my recommendation is head on over, go to theaugustarule.com/save, get the goodies, get the tools, get the downloads, get to know Nethaniel. His partner is hilarious. So if you see any of his social media posts, they're fantastic. He's really got a great sense of humor, even though he's an attorney. I'm just doing that for you, John. This guy's like a professional comedian. So the two of them, they're amazing human beings, really ethical. They aren't going to tell you anything that isn't true or they can't do. So this is one of those situations where if you're going to put your trust into someone, make sure you're spending some time getting to feel them and getting to know them. And I've spent days with Nethaniel. I've spent time with his wife. He's got an amazing family. He's just a good guy. So I can't recommend this highly enough. So with that, anything else I should have said that I didn't?
Very, very kind. I appreciate it.
Thanks you got it, my friend. Yeah, no, I can't wait to be saving with you and also sending more people your way, because I think every business owner needs this.
Yeah, thank you.
All right.
Yeah.
Well, let's rock and roll. This has been Capability Amplifier. I hope you enjoyed yourself as much as I did. We did. We'll see you in the next episode. Bye-bye.